Here, we are about to begin. We have just a couple minutes before 10 a.m., but I thought I'd get things going. I'm actually playing around with the Facebook page, so I am inviting some of my friends, and I'm looking for previous students who have gone through the course at the University of Houston, and I'm also inviting just some of my friends who I haven't talked to in a while. Some of you, when you get this invitation, you will think, this isn't for me, which is fine. You may know someone, though. I'm talking to my friends now, John Dankler, all of the folks that I'm inviting, really, a lot of these are just friends of mine. And you may know someone who would be interested in this course. So, let's see. Let me get rid of that. So what you should be able to see right now is I'm on my iPad. I have the Facebook page open, and I'm inviting friends. So this is basically this video is being broadcast live to Facebook, and we're on this page, Millionaire Habits. So welcome if you're just about to join us. I'm looking at this page. Let me see if I can find the live post. Doesn't seem to be showing, which is probably, oh, there it is. So talk about weird technology. The page that I'm showing you on my iPad is actually the page that I'm broadcasting to. So that's just weird. So I'm not going to keep doing that because that'll make you crazy. What I am going to do is I'm going to, while we get started, I want to welcome everybody. It's now time to start. So today, this is really our final lesson in the course on personal finance at the University of Houston, the Bauer College of Business. And it's been a privilege and a pleasure to serve you. You've done a great job in terms of all the homework that you had to do. But more importantly, hopefully, you've done a great job in learning a few of the basic principles in the course that can help you be successful. The big idea of the course, we'll talk about in a minute, is to become a millionaire by the time you're 50. So we'll look at the syllabus. But before we do that, I want to review the syllabus, and then I'm just going to quickly review each of the lessons, each of the 12 lessons, each of the 12 homework assignments. And my purpose is to do three things. One, I want to really just do an overview of the course. Number two, I want to give you, those of you who are students in the course right now, an opportunity to kind of refresh what you've learned. And number three, we're getting ready to, I'm getting ready, updating the syllabus and doing all the things that are necessary to do each week or each semester for the next group of students. So as I'm doing that, I thought this would be a good time to invite those students who are enrolled or considering enrolling to check out the course, see what it's like, and hopefully they'll know whether or not this course is for them. So for those of you who have not yet attended the course, this Facebook Live, which will be probably an hour, is for you. It's also for you, my students, who are currently in the course. And another group that it's for is, I have a lot of friends, clients who have kids. I know a lot of people who would benefit from learning the principles and the process that I teach in this course. So that's the main reason we're doing the Facebook Live and opening these different channels to provide content related to the course. So thanks for being here. Let's jump in. First thing I wanted to just highlight is the main way that students on campus discover this course and whether or not they want to take it is through GreatMyProfessors.com. So I just wanted to kind of buzz through this. I do not have an account here, but I was looking at these tags, and it's kind of interesting to me. There's a lot of homework. Skip class, you won't pass. That's true. You have to come to class. In fact, that's why a lot of students are here actually on this session, because they know they can't afford to miss another session in order to get the points they need. So very kind comments, some very true comments, and those tags are a good reflection of, I think, the experience students have had in the course. I get an overall rating of 4.8. Nobody ever gives me the hot tamale that says I'm, anyway. Overall quality, level of difficulty. I got to tell you, this course is very easy, and everybody who attends it kind of knows that it's easy. But nonetheless, it is what it is. There's a lot of homework, and you're going to see, we're going to go over the homework. But anyway, this is RateMyProfessors.com. I always ask, and I'm asking you to please consider going to RateMyProfessors.com and leaving your comments. Leave honest comments so that other students who are considering the course can know, my favorite thing, well, one of my favorite things to do is read reviews on Amazon. I really like Amazon. I like to buy stuff on Amazon. But one of the things I enjoy is the, just being able to see honest reviews for products and service, mostly products. So, all right, this is the syllabus. Let's jump right into the syllabus. This is the syllabus you can see is updated for 2019. So if you're in the course, you know that that's not you. We used the spring of 2019, and this syllabus is updated for the students who will attend in the fall. So let's look at the syllabus, and I want to just highlight a few things for you. Again, the class concept is to become a millionaire by age 50, and I'm the instructor. Here's the learning objectives. You'll create an effective real-life spending and saving plan, obtain an actual credit report, analyze investment and insurance products, compare and contrast types of retirement accounts, and calculate individual retirement funding needs, including your own financial projections for your personal retirement goals. So that's a very important part of the course. Students will become familiar with the 3 laws of personal finance, and I'll post a video specifically to cover the 3 laws of personal finance on this page later today. It's something I usually send out to the students prior to the course starting. So those of you who are coming into the course, you won't get that notification from me. You'll get it here on this Facebook page. I used to be, I would put it in Blackboard, but we're going to be putting things on this page now. So let's go through, just quickly review each chapter, the lessons, and the homework. So again, this is on the syllabus, and if you're a student at U of H, you get a copy of the syllabus when you enroll in the course. If you're not a student on campus, then you would not have that. So this is going to be helpful information for those of you who are considering following our journey here on Facebook as we create content. I'll be creating individual lessons to post here on Facebook for the purpose of reviewing with my students, as well as just sharing it with those of you who cannot be on campus at the University of Houston. So we start out with just highlighting the 3 laws of personal finance. The first law of personal finance is the law of spending and saving. Spend less than you earn so you can save more for what matters most. The second law of personal finance is the law of tax-advantaged investing. The IRS makes the rules. Your job is to take advantage of them. And then the third law of personal finance is the law of purpose and commitment. And one of the things we start out with each semester is just my goal is to find out early on, what is your goal for this course? I know that your goal is to get an A, and that's great. I'm all for that. I will support every student that comes into my course who's willing to do the work to get an A. In fact, it really is easy to get an A if you just show up to class, participate, and do the homework. So I'm all for that, but that's really not a significant goal to me. I couldn't really care less if you get an A or a B or a C. I don't really care. I share with students in the beginning of each semester, I got a whopping 2.82 GPA when I graduated from college. I paid every penny of my own college, and it mattered to me to graduate. And so, what you do with your college education, that's really important. What you do with what you learn in this course, that's what matters to me. And that's why we have a very clearly defined goal. And each homework assignment, each lesson is connected to that one goal. I will teach you how to become a millionaire by the time you're 50. But you remember, at the beginning of the course, I asked you to tell me what is your goal for this course. So that's one of the most interesting parts of the semester, each semester for me, is to know what is it that matters most to you. And so anyway, that's one of the first things you'll do, your goals. And we'll do a little personality assessment, which we work through in the course in one of the lessons. First week, the first chapter is around savings. So let's see, savings. Let's just jump into, I'll go through these one by one. And what I'd like to do is show you, you'll see the homework assignment. So the first week one, chapter 1, is around savings. And the homework assignment is, let's jump right into the homework assignment. First thing I ask you to do is create a tracking tool. It's a really simple assignment, but what you have, this is just one of the students who did the assignment. You have to select a tracking tool. So the tracking tool is, let's see, I'm not sure you're seeing what I'm seeing. Looks like you're not. Hopefully you are now. So the tracking tool is very simple. A lot of folks use their bank or their or Mint. Mint.com is the most popular. So that's first assignment you have. And then week number 2, I think this is week number 2, every week you watched a video. So this was the first video about savings. So this is what I'm looking for. I selected this homework assignment just to show because it's well formatted and it was delivered to me through Blackboard, which every assignment it comes through Blackboard. And so you can see it's got great formatting, and it's very concise, and it proves to me that you watched the videos and you learned a few things. So that is lesson number 1, or week number 2. And then we jump into a basic budget. So this is Natalie's basic budget. Natalie is a previous student. It's interesting when I look at this assignment, this first basic budget, it amazes me the quality of the assignment for some students. And I recognize we have quite a few accounting students who go through the course, but I really don't expect this kind of formatting quality. But I do like to show you kind of what this is obviously an A assignment. So that was week number 3. So I think that's actually week number 2. I may have mislabeled these, but you can see it on the syllabus. So let's go back to the syllabus and just open your syllabus for the current students. So chapter 2 is budgets, and you do that basic budget in week 2. So I think I had that mislabeled. But anyway, let's go back now and look at what do we do in the next week. Well, this is an article. So every week you do an article, you watch some videos that are provided to you through Dave Ramsey and his Foundations course. And this is one of the assignments that I received from a student who really took the extra time to format it and make it look beautiful, and I always enjoy that. I don't know about you, but if you're reading 100 papers every week, it makes it a lot more fun if it's formatted. It's very clear and concise. So you can see there's a lot of information here about budgeting and why it makes sense and how it supports the big goal of the course to become a millionaire by the time you're 50. So this is just another example of what you learned, what you will learn in this course. And I hope that if you're in the course now, I hope that you're taking advantage of, saving this information and reviewing it from time to time, not just for yourself, but with your family and the people who you are going through life with. When you get to be my age and you have your own kids, grandkids, I have my first grandchild, teaching them or sharing with them some of the secrets of success in managing money is an important thing. So that's one reason I'm hoping you just save this content. So let's go now, jump into the next one. We do a credit report and we get a list of creditors. So the credit report is optional, as you can see. I don't mean to show the name of that student. So the content for this assignment is to list your creditors, and many of you did not have creditors, and that's awesome. But the credit report is very helpful. I don't really care to see it, but I want to answer any questions you have about your credit. And then we get into debt. Again, I think I I don't know how this happened, but I mislabeled. This is debt, which is week 3, I believe. Yeah, week 3. So this is a great example of a great paper. I'm not going to let you read the comments. Hopefully that isn't. So what happens every week in these articles is you put together the content that proves to me you watched the video and that you learned some things. But the first paragraph, the introductory paragraph, is one that helps me know that what you learned. So what I like to do, what I like for you to do is tell me, what did you learn this week that really can make a difference for you? And so that's the purpose of the beginning of that assignment. All right, so let's go now to the next assignment. This is one of the homework assignments, the parental interview. And this is one of my favorite assignments. And the discussion that we have in class after this assignment has been completed really is, to me, one of the most significant things we do together. So when I make this assignment, I explain to you that you're going to interview someone who you respect, someone in your life who you believe does a really good job of managing money. I try to set the table by suggesting that it be your parent or a grandparent or an aunt or an uncle, someone who is a generation older than you. So that is the purpose of this assignment. It's a very important assignment. And I think this is an assignment that you could do even now before you get into the course. It's very simple. I'm going to post this assignment on this Facebook page so that any students who want to do a few things in advance of the course can do that. Here's an article. This is another lesson, another great paper article. It's got a lot of good statistics. It's about college students and money. So it's got a lot of good information. 85% of what creates success is because of passion, integrity, and drive. That's just one little highlight from this this paper. We also go over the DISC profile: D, dominant; I, S, and C. Let's see, what is I? Influencing. Yeah, I forgot. So this is a pretty important part of the course. We talk about how to be successful in life, and that always involves people and learning how to relate with people. So when we do the DISC stuff in class, it's really intended to help you better understand yourself and how you show up in the world based on your personality. And the more you can know that, the more you can be aware of how you show up in the world, the better you'll be able to relate to other people. So the next part of the DISC stuff is just really being able to recognize different personality traits in other people so that you can somewhat, be more perceptive, but mainly so that you can be more productive, more helpful in your work with other people, whether it's someone you love or someone you just need to get along with, a roommate, a boss, a supervisor, whatever it is. But it's a very important part of the course that goes beyond the technical stuff you would normally expect related to money and has to do with life. So much of this course really is about life. So anyway, this is just another example of a great piece of homework. And then we get into the spending, the 30-day spending. So again, at the beginning of the course, you are asked to commit to selecting a spending tracker. And you do this assignment 3 times. So let's just jump over to the syllabus again and watch how that works. So you see these where it shows, let me see if you're seeing that. Looks like you're not seeing that. There you go. So this is the, again, just a list of the assignments. But what I wanted to show you is that you're doing this spending tracker. There's actually several assignments related to the spending. Of course, you do the budget, which is just kind of practice, but you submit a 30-day spending plan early in the semester, after 30 days, obviously, and then you submit another 30-day spending plan 30 days later, and then this week, the last week, just like if you're in the course, you did the 60-day spending plan. And really, each time you do this, it's the same assignment. I want 3 things. There are 3 things I've asked you to provide me in this assignment. Number 1, I want to see the data that you accumulated using your tracker. So whatever tool you use, whether it's Chase Bank or Mint.com, which is the most popular, when you use that tracker, that app on your phone, every time you use your debit card, it gets logged. And so when you do this assignment, what I'm looking for is I want to see the actual data, because you can't really make that up. It's to the penny. It shows exactly where you spent it. So that's number 1. There are 3 things I want in this assignment, and you do this assignment 3 times. Number 1, I want the data. Number 2, I want a graph, which generally means, depending on the tool you're using, you'll have to go and create a graph. So let's see if I can find the spending assignment. Yeah, here's one. So this is a good one. You see the data. Let me make sure you're seeing what I'm seeing. You see the data. It shows exactly how much was spent, the date, where it was spent, how much to the penny, and that's the data. And this is just being exported from the Chase app that this student used. So let's make sure that we don't show any personal information. But here's the part that, the second part is the graph. So this student, the tool that they use, the tracker, automatically exported this nice little pie graph, pie chart. I don't care what kind of chart you use. I just want to be able for you to see in a picture a category of where you're spending your money. Now, in this case, I'm sure I gave the student an A, but it's probably not exactly A work. And here's why. Well, it's not bad, obviously. But when you look at this chart, there isn't a tremendous amount of detail, and it would be more helpful if there was a little more detail. Like education, 35%, that's fine. Food and drink, health and wellness. But education, 35%, food and drink. I'm curious, like how much of the food and drink was groceries? How much of it was Starbucks? How much of it was maybe the bar? In order for this to be really helpful for someone looking at this graph, and I'm not talking about me or the auditor, I'm talking about you and your life and being able to take a quick snapshot of where you're spending. This graph doesn't really tell you how much you're spending in a discretionary way at, for example, Starbucks or the bar or the fast food place down the street. So it's same with education. I suspect that lumps in everything related to room and board, but I don't know. So again, I'm sure I gave this student an A, but I'm trying to, and I try to be nice and helpful without making it too difficult, but I really want you to understand what's possible in terms of doing these exercises, these homework assignments, because that's really the only way you're going to get the best bang for your buck out of this course. So let's go on to week 5. We get into a very interesting conversation about the differences between men and women. And so let's see if you're seeing what I'm seeing. It looks like I have a little delay in my screen, so sorry if there's a delay. I'm using technology that seems to have a delay. I'm hoping that what I'm seeing may be a little more delayed than what you're seeing. But anyway, what we're looking at here is just the assignment from week 5. This is a fascinating assignment. Not the assignment so much, but the conversation that we have in class after this, the differences between men and women. And I'm 57 years old. Actually, I'll be 57 next week on tax day. And that puts me in probably what most of you would consider a category called old, which is just weird because I don't feel old most days. But it definitely puts us in a different paradigm. And so this is just a great time for you to reflect on what are the differences between you and your potential spouse or your significant other. Is one of you a saver? Is one of you a spender? We use the terms free spirit and financial nerd. And so anyway, this is a great lesson. We learn a lot about managing money and more about managing relationships. Again, it's just a lot of good information about the psychology of money. So that was week 5. And then we have, this is just another example about relationships, talking about what Dave Ramsey and his videos illustrated, along with some of the students' personal insights. This was a great paper, great job. All right, then we get into week 6 and we calculate the cost of retirement. This is an important, very important assignment because only 1 in 25, or 25%, maybe it's 20%, a small percentage of Americans have ever taken the time to calculate the cost of retirement. And so, you know, retiring is a big goal for most people. It's a very big goal. And when I say a big goal, I mean it's got a lot of moving parts. And so what you do in this assignment, and by the way, you do this assignment 2 different times. The first time is just so you can take a stab at it. But we start with all of the variables that affect and impact the cost of retiring. So, for example, if you retire when you're 50, it's going to require you to save a whole lot more money than if you decide you're going to retire at 70 or 65. So that's the first variable we have to figure out. What is your assumption? What is your goal? What is it that you want to happen in your life? Do you want to retire early? If you do, you have to save more. So that's just the first one, age of retirement. And then you got to figure out, okay, what is your assumption about how much money you're going to be making when you retire? Obviously, that's a big consideration because typically when you do retirement planning, you take a percentage of how much you currently make or how much you averaged over your career, and you say, okay, I want to keep that standard of living. So that's an important number. If you can live on $20,000 a year, then you can probably retire on a little bit less or maybe a little more, depending on the cost of health care. So we don't get into the real nitty-gritty of retirement planning. This is a basic calculation, but it's pretty important and it's pretty simple and it's pretty helpful. And you do a great job. Students do a great job on this. It's like jumping into the deep end of the pool in terms of personal finance. And I'm really proud of every student who does this. So there's lots of variables. You can see them. What's the rate of return on your retirement investments? How much are you expecting to get in terms of a rate of return before retirement? Because whether you're investing now as a 25-year-old or investing as a 50-year-old like I am, your return on your investment is going to make a big difference in terms of the outcome, how much money you accumulate through retirement. So that's an important rate of looks like my Apple Pencil is low. So let's see, how much do you expect inflation to be? Will you be married? Are you going to include Social Security in your assumption? That's an important question. So all of these things are part of the calculation for retirement. And then you come up with an ending balance of how much you saved. This, by the way, this student, this is the first time they did it. And that expecting to have income equivalent to 90% of their. So anyway, that's the first time you do it. We'll see another example in a minute that will be more helpful. Because the second time you do it, you learn some more important distinctions. All right. The next, chapter 6 is consumer awareness. Oh, sorry if I'm showing your name there. And this was just a beautiful, beautiful, well-formatted. I love reading these, especially the first paragraph. As you can see, typically, the content that's in each of these is going to be pretty much the same, different organization, different presentation, different wording, but we cover the same content. So reading all of this to me is not really that critical. What it is critical for is for you to save this and have it as an example or a good information for you after you get out of the course. Okay, the next week we talk about bargaining and negotiating. And bargaining and negotiating is something that is very interesting because half of the class would sit on the side of the table where they hate negotiating. And that's what this student said. I hate negotiating. And, that's cool. But what we do in the class, remember, we separate. We say, pretend that you're on this side of the room and you just don't feel comfortable negotiating. Bargaining, that's not you. It's not comfortable. It feels awkward. It feels disrespectful. And then on the other side of the room, we pretend that these people are going to negotiate everything. And so the whole idea of that exercise is to try to come up with an imaginary number, a value. What do you think is the dollar value or the percentage of your budget? Assuming you make $100,000 a year, if you decide, I'm never going to bargain, I'm never going to negotiate, I'm just going to take whatever the sticker price is, versus the other side of the room who says, no, I'm going to negotiate everything, which, as we know, Dave Ramsey is that guy. He's going to negotiate, bargain, and that he got this week for bargaining and negotiating. Dave Ramsey gets more excited, I think, about that topic than any other topic. It's really fun to watch. That's my favorite. Anyway, so that's the discussion in class. And then we unpack some basic principles of bargaining and negotiating, and I share my top 7. But what I'm really trying to find out are, what are your top 7? What are your top 7 techniques for bargaining and negotiating? Will you use them? That's the key, because if you don't know what they are, if you've already decided, I'm not going to bargain, I'm not going to negotiate, then you're going to lose. It's going to cost you, which means you're going to have to save more for retirement. You're going to spend a lot more on a lot of other things, and you're missing tremendous opportunities. So my encouragement is to everyone, think about using a few of the basic tools and techniques which we work through in the class that will help you become closer to a master negotiator. And even if you just learn the basic few, like silence, or that's not good enough. That's just not good enough. That's not good enough. What's your best? There's so many techniques, and we've all seen them by people that we admire who are great negotiators. So my encouragement is just to think through what's possible if you decide that you want to be a negotiator, or at least practice. And then one of the assignments is I ask you to tell me, what will you negotiate? What will you bargain in the next season of your life? And I get a lot of very interesting, sometimes well thought out, sometimes random, I did this at the last minute just before the assignment was due. But nonetheless, you've got to think about, what are you going to negotiate? What are you going to practice negotiating with? And that's the purpose for that assignment. So let's see. Here's just another article. Give you another example of what an article looks like, a good article, one that is well written. And I like the formatting, very simple bullet points. It's better than one big, long paragraph, that's for sure. So week 7, bargaining and negotiating. No means yes. I love that. And that's another thing I think I'll just point out, is that these assignments, these articles, these video articles are, I ask you to give them a title. It's just fun. I mean, by the time you finish writing your article, you have this opportunity to just give it a name. And you will remember it better if you do that. And it makes it so much easier or more fun for me to read and experience. So anyway, this is I enjoyed this assignment. I enjoyed this homework. And so just wanted to give you a highlight. I hope you're keeping your papers. The next week, week 8, we get into credit again. I mean, we spend a lot of time in this course on credit cards, debt, because, as I say many times throughout the semester, we use Dave Ramsey's material, Foundations, his college curriculum for financial literacy. And Dave, his story is really focused on the fight against credit cards. So Dave Ramsey and his team have developed quite a marketing strategy around what they're marketing. And they're marketing to people who have been buried in debt and haven't learned how to manage their credit. in a responsible way. Obviously, well, not obviously, but I know that I need to be careful saying this on the World Wide Web, but there's a couple of things in this course that I just don't agree with respect to Dave Ramsey's approach. One of them is I use credit cards. I think it would be insane for me to cut up my credit card. And I think if Dave and I were having coffee, we would both agree that the responsible use of credit cards is not only responsible, but how would you get along? I don't know how I'd get along without it. I don't have a debit card. I guess I could get along without a credit card if I had a debit card. But I like credit cards. I like the rewards I get. It makes sense to me. Thanks to my friend Jason Steele. If you're listening, Jason, I just sent you a friend request, not a friend request, but asked you to like my page. Jason Steele he's a hacker, a credit hacker. Has some great stuff. I'll ask him to come and share a few of his ideas if he's willing. Very interesting stuff. But he's the guy that helped me understand how rewards work on credit cards and how you can really take advantage of them. So that's kind of one area that I just don't agree with Dave. So I feel like it's my job to try to help you manage money well. And frankly, if I had to manage money using cash, coins, dollar bills, it would be a disaster. And that's just the truth. Managing money using a credit card is so much more efficient and effective for me. And if you're going to be a business owner, I think it's pretty much a no-brainer, in my opinion, that credit, the responsible use of credit, is part of life. Nonetheless, we dive in to FICO and the law related to credit and what makes up the FICO score, which really is interesting to me. And I think Dave is right. The whole credit score deal, it's like a scam. It's an I love credit score. That's what Dave calls it. And I think that's true. Credit cards are, and credit in general, it's not a right. It's a product. And their job is to get your money in their pocket. So one of the things we do in the course early on is I show you how credit cards actually work. I show you how much it costs. Remember that lesson if you were in the course? I show you, we go through an example. I think Billy and Sally, remember Billy and Sally? And we unpack how Billy's credit card worked and how the interest got compounded on his credit card and how he paid the minimum amount and that credit balance continued to grow and the amount that he paid to the credit card company in terms of interest and then fees when he missed a payment. Those are the things that, in my opinion, you need to know, you need to understand, because they will make you just angry enough at the credit industry that you will be a lot smarter and you won't fall for it. And so if there's one lesson that I think everybody should attend and one lesson that I am committed to putting here on this Facebook page, it's how does it actually work, a credit card? So we'll move on now. But that lesson, this was just a couple weeks ago, credit and FICO scores. And then one of the assignments is just to do a car insurance quote. So one of the lessons, one of the weeks that we spend together is about insurance. And there's just no way that I can cover all of the important stuff that relates to insurance. If there's one thing that I'm an expert at, if there's one thing that I know way too much information about, it's insurance. So I was a State Farm agent for many years. I have a lot of letters after my name, and most of them relate to insurance specifically. CPCU, Chartered Property and Casualty Underwriter. It's a pretty big designation in the insurance field. Chartered Financial Consultant, Chartered Life Underwriter, Certified Financial Planner. Other than the CFP designation, those other three are pretty specific to insurance, which just means I have a lot of information and a ton of stories about insurance, which I try to tell you in class, but we just don't have enough time. So that's one of the reasons that this Facebook page is important to me, is because now I can start to post different stories and you can watch them on demand, and I can send you a link to those videos so that the ones that I miss in class, I don't have to miss here. But one of the assignments you do is getting a quote on your car insurance. So that quote is one thing, but the other thing is you get an opportunity to unpack the coverages on your car insurance. So we talk about these coverages in class, some of them. We talk about the big ones, especially liability and what those numbers mean, and uninsured and underinsured and what those numbers mean. And so these are important pieces of the puzzle for your car insurance. And we just don't have enough time to cover everything well in this course because we cover so much. But these are important coverages. We use the car insurance quote because most people drive at some point in your college career or in your life. You're going to be driving. So the most frequently used policy, the policy you're probably going to file a claim on the most, is your car insurance. So recall, we talked about collision, we talked about comprehensive, and we really spent some time distinguishing the two coverages. Comprehensive means everything, which is great to know. Comprehensive coverage covers everything unless it's excluded. And what's the number one exclusion on your car insurance policy? Under comprehensive, that coverage has a list of exclusions. One of them is collision. So your car insurance policy, when you get your quote, you're trying to get a quote for collision and comprehensive and the other coverages as well, especially the liability. And I'm not going to take the time now to unpack what those three numbers mean, but they're very important numbers. And we go through that in class too. So if you don't know, you can Google this and you can learn this. But as a consumer, you're going to spend a lot of money on insurance. And that's why insurance is a very important element in our course to learn how to become a millionaire by the time you're 50. You're going to spend a lot of money on insurance. And insurance is the best, most cost-effective way to manage risk. When you buy an insurance contract, what you're doing is you're transferring the risk to the insurance company, and you pay a premium to do that. But there's a lot of ways that you can maximize your premiums and the cost by selecting the right coverages with the right coverage amounts and the right deductibles. And so when it comes to your car insurance, getting a quote is a great way to learn how that works. It works in a very similar way in homeowners insurance. It works a little differently in health insurance. Life insurance doesn't have a deductible. We talk about life insurance, both term and permanent, two very important topics that we just don't get to spend enough time on. So we will have more helpful lessons here on this page for you students who are graduating and for the students who have graduated and for those of you who can't even be part of the course. Insurance is expensive. It's important. In order for you to be effective in managing your money, you need to know insurance. You need to know some basic things about insurance, and that's what I'm going to do, is teach you the most important things you need to know so that you can become a good consumer of insurance. That's my goal, and I don't have near enough time in class to make that goal, to achieve that goal. So that was week 9, car insurance quote. Here's another, just another example of a student who did this, and you can see the coverages. Now, this student, I thought, did a better job of getting good coverages. And this was one of the objectives, was I wanted you to figure out, okay, now that you know what these coverages mean, what those numbers mean, I want you to get a quote so you can see what kind of coverage you would get for the price that you're going to pay. And then I wanted you to give me a summary of each of the coverages that were on your quote. So in this case, the student did a great job of giving me a great summary of each of the coverages. And that's what I'll be going over in future Facebook Live sessions as I unpack a little in more detail some of the things that we are not able to unpack so well in class because we just don't have enough time. And that's just car insurance. Home insurance is another deal. Commercial insurance, and one of the most important insurances, life insurance, disability insurance, long-term care insurance, and we haven't even gotten into commercial insurance. Those are just personal lines insurance. So I hope you'll stick around. There's a lot more to learn, and I just couldn't teach it all to you. So we're running close. We got about 10 more minutes. Let's see. Back to the 30-day spending plan. This is just another assignment with good detail. I thought this student did a great job with the detail. And there's a chart. And again, I don't really care too much about how you do this. I just really want you to get a good picture of where you're spending your money. So this was the second 30-day spending. And then we jump into investments. And we start with asset allocation. And let's see if you're seeing what I'm seeing. There we go. So when we get into investing, this is probably the most popular section of the course. And I want to highlight 5 things quickly. First is the perfect investment. We talk about it not once, not twice, but 3 times throughout the semester. The perfect investment, well, there's really no perfect investment, FYI. I have to say that, disclaimer, because I'm registered with the SEC, there is no perfect investment. Okay, there, I said it. However, the perfect investment involves your 401k plan. If you work for a company and they offer a match, here's the example I use over and over in class. Let's pretend that you got your dream job and you're making $100,000 a year. And let's pretend that the company you work with is doing a 6% match on day one when you sign the papers in HR. What I want you to do is to make sure that you know how much $6,000 is on a twice a month basis, assuming you get paid twice a month. So if you're going to spend $6,000 in a year, how much is that per month? $500 a month. And if you're going to do it over, every 2 weeks, that's $250. So what you're going to do day one, in order to get the match, is you're going to figure out how much is the match. Let's do the math real quick. So let's just do the math. Maybe we can do the math here. So you make $100,000. 6% of $100,000 equals $6,000. That's easy. So the company is going to give you $6,000 as a match. That's the 6% match of $100,000. But you have to contribute $6,000 to your 401k, which means you have to do, $6,000 divided by 12 equals $500. You get paid twice a week or twice a month, I'm assuming. And so basically, if I'm doing this math right, $250 a month goes into your 401k. And that means you've invested $6,000 for 1 year, and your company then is going to come and match it. Now, this really isn't talking about any kind of investment. This is one of 5 things I want to highlight around investments today before we run out of time. So you're going to be putting $250 every paycheck into your 401k. Your company's going to match that. That's the perfect investment. If you don't take advantage of that, you're leaving $6,000 on the table that the company, in this example, is willing to give you in the form of a match to your 401k. The perfect investment. when you think back about how challenging it was to get the numbers to work out for your retirement, basically, or if you follow the 7 baby steps that Dave Ramsey lines out, the 7th baby step is to invest 15% towards your retirement. Well, if you've got this example going on in your life and you're getting 6% from the company, you just cut in half the work that you have to do to achieve that respectable retirement. And you just don't, it's a no-brainer. So that's number one. The next 4 things I'm going to go over are the investment strategies that are designed to, let me get back here. The investment strategies that are designed to maximize your return and minimize your risk. And this brings up a second point of contention or disagreement, credibility, in my opinion, with Dave Ramsey. And that is, in your material, he talks about 12% returns in a mutual fund. Well, that's not reasonable. I would not count on 12%, and I'm a certified financial planner, and I'll be happy to have that conversation with Dave or anybody that follows Dave anytime in a public forum. You know, you have to think through risk and reward. So these next 4 strategies that I'm going to talk about give you everything you need, in my opinion, to become a very effective investor and to be very successful. Now, I'm assuming that you're 20 to 25. I know, Abel, some students are older, and these strategies don't work as well. They work better over a long period of time, and that's why I've selected 4 investment strategies designed specifically to help you maximize return and minimize risk. The first strategy is, I use the story of Enron. It's diversification. Simple, most important strategy there is. You're going to get all kinds of folks like your buddy who tells you that this penny stock is a great investment. And I'm telling you, don't ever invest in one thing too much. Diversification. Think about Enron. I'll tell you this story in another episode. Strategy number 2, as you may recall, if you were in class, is asset allocation. Asset allocation is the single most important determinant of your portfolio's returns. Asset allocation. It's like diversification at the next level. So then we get into asset classes, which is what this assignment addresses. You have to go select a mutual fund, and that mutual fund or your investment, you pretend you have $100,000, and you're going to break it out into at least 4 different asset classes. And so asset classes become very important in terms of managing risk and reward, because asset classes helps you get to the next step where you're doing asset allocation. And that's really the key, is asset allocation. Asset allocation is the second strategy, and again, it's the most important determinant of your portfolio's returns. The third one is dollar cost averaging. We told a story about Farmer Joe. I'm not going to get into it now, but dollar cost averaging is the most powerful strategy to help you maximize your returns and minimize risk over time. And then the fourth strategy is portfolio rebalancing. So just remember those terms and begin to just be aware that those are strategies, and they're very helpful strategies. And if you will learn those and couple them with that perfect investment, you will have done the lion's share of what you need to do as an investor who's going to become a millionaire by the time you're 50. Now, I'm not going to spend a lot of time on the next 2 weeks. The next week is retirement savings plans, and you've done a great job learning about retirement savings plans. There are different kinds, and I use the 3 buckets. I should grab my buckets, but I'm not going to. Anyway, we covered that well in class. It really focuses on the second law of personal finance, the law of tax-advantaged investing. And so it's a very important lesson. It's a very important assignment to understand different types of accounts. Has nothing to do with investing. Has everything to do with the IRS and types of accounts. And so we talked about the Roth IRA. We talked about the 401k. All of these are named, well, the 401k, that's a code. It's a section of a code in the IRS code. We talked about SEP IRAs and 403bs. And so a lot of information, but you really need to figure out which one applies to you and understand that type of account, including the Roth IRA and the individual or the traditional IRA. So I'm not going to go into that tremendous amount of time right now because we're at an hour and we're pretty much getting close to being done. The last assignment of the semester is real estate. And got a good summary here from a student. I got to tell you, though, if you have comments about real estate, I would be happy to give you my honest input. But real estate is one of those things that, in my opinion, probably doesn't really belong in this course. Again, Dave Ramsey's the one who put together the basic curriculum. Dave Ramsey is a real estate guru guy. That's how he met his catastrophe, by getting way over leveraged in real estate, commercial real estate buying and selling. What I would encourage you to do is think about one real estate transaction that may be very important for all of us, and that is the purchase of a home. So my focus moving forward will be, what's the best way for you to prepare for purchasing a house, including financing. If you follow Dave Ramsey, you know that he doesn't really go for the traditional way of getting a loan because it involves your credit score, and there's other ways to do it, and we'll get into some of that. We don't spend a tremendous amount of time in the course on real estate or even buying a house, but it is a worthy topic. So if you have questions, comments, let me know, and I'll get you more information. I'm going to just say I can't think of anything I need to say except it's been really great being with you this semester. Those of you who are coming in to the course, I can't wait to meet you and get to know you. And those of you who are outside the course visiting us on the Facebook page, I would love to have you be part of our community, and your comments, your suggestions, your resources, you can post those on the page. I will be giving some admin rights to some of my friends who have good stuff to share. So if you're one of those and you think you'd like to be a contributor, a collaborator, just send me a message on Facebook and I will invite you to be an admin, which means you can help me manage this page in a way that will help us provide the kind of resources that we want to provide to students and young people, both in the University of Houston and outside the University of Houston, folks who are interested in becoming a millionaire by the time they're 50. That's just a goal that I made up. You can name whatever goal you want related to your life and personal finance. And I promise you that the principles and the process that I teach in this course and that will be provided on this page are going to relate very well to any goal that you have that involves managing money. So thanks again for being part of the course. If you're a student in the course, please take a minute, go to ratemyprofessors.com and leave your honest comments. Also, you're going to be getting the Bauer evaluation, and it would mean a lot to me if you would take the time to complete that evaluation. That's how I keep my job at the University of Houston. Again, I'm Jim Munchbach. I hope you'll connect with me on LinkedIn. My name is Munchbach with an H on the end. Like our page at Facebook, Millionaire Habits. We also have a YouTube channel, same search, Millionaire Habits. If you know someone who wants to get into the business of becoming a wealth advisor, you're welcome to join us on the Facebook page, Wealth Advisor Career. We'll be doing a lot of coaching, training, and having some fun there. So hope you'll join me on the journey. I'd love to be part of your journey moving forward, and it's been great having you again. Take care. That's going to end this session of Facebook Live.